G'day, it's Justin Hogg from RightSource. We're just taking you through some accounting basics for those of you in business who want to understand what it is your accountant does, or just wants to have a better understanding of the financial side of how things work in terms of the records and your accounting records in your business. So today, what I wanted to talk you through is explain what a debit and a credit is. Now, this is the building block of all accounting. So every transaction we do in accounting has a debit and credit. So what I wanted to do today was try and understand, for those who wanted to understand that, I suppose a conceptual idea of what they mean and how they're used. So the way I like to explain debits and credits, debits is when you get something, credits are when you give something away. That's simplistically how you look at it. So a debit is when you, for example, if you went and bought a muffin from the shop, that muffin is a cost to the business. You get that muffin, so it's a debit. Similarly, if you were to give someone a muffin, that is a credit. So it's recorded in your accounts as a credit. Now, that's really conceptual. What might help this make a little bit more sense if we talk about assets and expenses and revenue and liability, okay? So when you get something, it's a debit. Now, a debit can either be normally an expense or an asset. Now, an expense is when you use something straight away. So if, say you got that muffin, you ate it straight away, well, you've consumed that muffin, it's an expense to the business. So that's a debit. If, for example, rather than buying a muffin, you wanted to make your own muffin, so you bought an oven, well, that oven would still be, if you got that oven, so you received something, that oven would still be a debit to the business, but because you can use that oven later to make muffins, it's an asset. So an expense is something you get that you use now, an asset is something you get that you use later, and they're both debits because you get them. Credits are what you give away. So if you were selling muffins and you gave someone a muffin, that's a credit and that's revenue. So when you're looking at your business, revenue is credit, and that's when you give something away. Effectively, you're selling something, but you're giving something away. So that giving is the credit. If you promise to give someone a muffin later, you haven't given anything away yet. You're promising to give it away in the future. So it's still giving something away. So that's a liability and it's a credit. So that's a really quick way of looking at debits and credits. Now, the other thing that's important with debits and credits in accounting is that accounting is all about balance. So if you look at it from a scientific point of view, for every action there's an opposite and equal reaction. The same principle, for every debit there's a credit. They have to equal because there's always a balance. In each transaction you have, there's always two sides. So there's always something you give and always something you get. And every transaction that happens in your business, there's always two sides to that transaction. Once you understand the give and the get, you can work out the debit and the credit. And then from working out the debit and the credit, you can work out whether it's an expense or an asset, revenue or liability. That is what the entire world of accounting is built on, that debit and credit and that concept. So whether you're a student going through university trying to get a handle on debits and credits, or whether you're a business owner who just wants to understand what their accountant does and how they compile the financial statements, that's what it's all based on. So hopefully that gives you a little bit of an insight into one of the peculiarities of accounting. If you want to look at some more videos, we've got some more accounting basics we're doing recently, but we've also got some budgeting tips. Check out the YouTube channel, subscribe below. Otherwise, I'll look forward to catching you guys next time. It's Justin Hogg from RightSource.